things. So talk about your investment philosophy and why, you got those types of results. How did you do it?
Well, my idea of risk control is a little non-conventional. I like putting all my eggs in one basket and then watching the basket very carefully. I think, I don't know what they teach at Marshall, but at most business schools they teach, I think, a lot of nonsense called risk-adjusted return and diversification. Ouch. As a money manager, if you look at a normal portfolio, most people will make 70–80% of money that year on 2 or 3 ideas, even though they'll have 30 or 40 things in their portfolio. My concept was to put into those 2 or 3 ideas that I had the most conviction in. I was also lucky to travel across asset classes. So I traded commodities, currencies, bonds, and equities. And it gave me the discipline. If I didn't have a good idea in equities, I was happy to have no equities. Or the same thing with bonds. So when you have a quiver with a bunch of arrows in it, you can usually find something to put a lot of money into. The only other thing I'd say is too many investors look at the present. The present is already in the price. You have to think out of the box and sort of visualize 18 to 24 months from now what the world is going to be and what securities might trade at. What a company's been earning is ridiculous. It doesn't mean anything. What you have to look at is what people think, what a company's earning, what people think it's going to earn, and if you can see something 2 years, it's going to be entirely different than the conventional wisdom. That's how you make money. My first boss used to say the obvious is obviously wrong. If you invest in conventional wisdom, you're going to lose your butt.